Hey everyone, in this video you're going to learn what a real estate syndication is and why passively investing in it might make sense for you. Welcome back, fear-free investors. My name is Lucas Miller, host of this channel, host of the Fear-Free Passive Investing podcast, and I'm glad you're here today because we're going to talk about Syndication 101. Now, if you've been here for a long time, you'll know that we put out a What is Syndication video a long time ago, like I think literally my first video. I'll link it here, and if you want to see some cringe video from when I didn't know what I was doing, and not that I know what I'm doing now, but back then was really bad, check that video out. But we're going to expand on syndication and what it is and why you might just be hearing about this centuries-old practice now. But first, real quick, if you've gotten any value out of this video or maybe some of my past videos, go ahead and leave a like and a comment down below. It really helps the YouTube algorithm boost this so that more people see this and start changing their lives. So I would really appreciate if you could do that. So let's just start by talking about what is a syndication. The basic definition is that a group of investors pool their money together to increase their buying power, their purchasing power, and they basically use that as a down payment to level up into something bigger with the use of leverage or debt. You don't have to do that to syndicate something, but that's the benefit of it. You pool your money together to buy something bigger than what you could individually afford. So why has syndication become so popular over the last 5 or 6 years? Well, in the year 2013, President Obama passed the Jobs Act. And this did a lot of things, but part of that is it opened up crowdfunding to individual investors that aren't necessarily accredited, or they just didn't have those opportunities available to them before. So here's a fun fact about the Empire State Building. It was actually one of the very first syndications, and a group of general partners actually raised $33 million from about 3,000 investors for about 10 grand each. And the idea behind that was that you put in this $10,000 and you put it to work, you invest, and you lower your individual risk by not buying a building yourself and having that downside. The most you could possibly lose in that scenario was $10,000. But the most you could gain, well, there was no ceiling on that. And that's the benefit of syndication today still. So let's talk a little bit about how it works and go through just a general timeline of what a real estate syndication is. In this scenario, we'll just use an apartment building because, again, it's what I'm familiar with and it's easy to explain and easy to understand. All right, so to start, the operator obviously has to find the building that they want to buy. This could come in any way, shape, or form, any unit size, but generally it's bigger units, bigger buildings, bigger price tags to make sense of actually syndicating it. You wouldn't want to do a small building because the cost to operate a syndication is very high. There's a lot of legal fees. There's a lot of hoops to jump through. You wouldn't want to do it for a small raise. So you find a big building. Next, the operator will actually get it under contract. They'll finance it. They'll figure out the underwriting. They'll figure out what kind of debt they're going to put on it. And they'll just package it up in a nice little ball so that they know roughly what they're buying it for, what they can achieve as far as returns, because the next step is to actually market the property. So once you have your cash on cash return, your internal rate of return, your average annual return, or whatever return on investment metrics you want to use, once you have that, you can start marketing that to investors. Now we're going to talk a little bit about what kind of structure you're going to actually use or you'll want to use, but in general, you're going to start marketing this out to people that have money to invest. Next is the fun part. The deal is actually funded and it closes. And that's an exciting time, but it's also a tumultuous time for the property, the managers, the property managers, the sponsors, everyone. But eventually that property is going to be stabilized and you're going to actually start to get those returns back, hopefully, if everything goes well. And that's really it. It's pretty simple. It's pretty easy to understand. It's just like buying a residential house, but instead of you and your wife or you and your husband, you're just going in on it with some business partners and some people you might know, you might not know. All right, so I talked a little bit about the different structures you could use to raise money. And we're going to do a whole video on that in the future, but just in general, know that for basic apartment syndications as of April of 2020. There's two really main sources that you're going to use. They're both exemptions under Regulation D, which allows smaller businesses to raise capital for funds. And that's basically what you're doing. You're a small business. Now, under the exemption of Regulation D, there is a 506B syndication and a 506C syndication. And again, we'll do a video on each of them and how they're different and everything. But just know one can be advertised, one really can't be advertised. Both, you should probably have a pre-existing relationship with your investors, but under 506C, it's not a requirement. Now, I have to do a legal disclaimer here. I'm not a securities attorney, so I might misspeak, but just know that in general, this is the terms that you really should be familiar with if you want to passively invest. All right, so you might be asking yourself, okay, as a passive investor, what is required of me? How much work do I have to put into this? How much information do I need to understand? And to be honest, there's really not a lot for you as a passive investor that needs to be done. And to be honest, there's not a lot that you need to do as a passive investor. There's a couple things. One, you have to read the PPM. That's the Private Placement Memorandum. That's something that you will see once you indicate that you're interested in a property that a sponsor has to offer. So you read through the PPM, you like what you see, but maybe you have a couple questions. That's the next step that you need to do. You need to ask questions of the sponsor. Usually just like maybe a handful, sometimes it's a lot, especially if it's your first passive investment, that you're gonna want to get crystal clear on anything you don't know right off the bat. And you should be asking your sponsor that. If they're not answering questions, that might be a sign that you need to choose someone different. I know I've had some investors that have asked me a lot of questions, and some investors that have maybe asked just one or two. Usually some people have questions no matter what. So once you get those questions out of the way, the next step is to sign the PPM and make sure that you're fully committed to this by wiring the money to the account that the sponsor gives you. So once you wire your money, that's it. You're done. You read your quarterly reports or your monthly reports or whatever the sponsor gives you, but that's it. And hopefully you just sit back and collect that cash. Now, obviously it's really easy to say that sitting in front of a camera. Now I have passively invested before, but the thing is, you have to be educated upfront. And that's something not a lot of people are gonna tell you about this. They'll say, oh, it's the easiest money you've ever made, or passively investing, you could do it anywhere. But in reality, you have to get really comfortable first to be able to want to wire $50,000 to $75,000 to $100,000 or more. So you gotta have that upfront education. And so I have some videos on what you can do to educate yourself as a passive investor. I'll link a couple here and leave a couple down in the description if you're interested. But just in general, know that you need to educate yourself from a couple different sources. Hopefully, I have been doing a good job of putting out some content for passive investors. But if you have questions, you can always ask me, and maybe I'll do a video about it, or maybe I'll just answer your question. But in reality, there's lots of different sources you can read on the subject. You can listen to podcasts, you can read books, you can listen to video or watch videos. There's just a lot of content out there. And hopefully you don't have that fog of war situation where it's too much information. And if it is too much information, you might want to take a step back and just maybe talk to some people that have passively invested before and see what they say about it, and almost interview them on their experience about it. I think that's that's the premise behind the Fear-Free Passive Investing podcast. If you haven't checked that out, basically I interview passive investors almost once a week about their experience and how they got comfortable with the idea of passively investing. So if you want to listen to that, I'll leave a link down in the description for that too. And really that's it. That's syndication in a nutshell. Passively investing in one deal isn't really going to change your life. The whole benefit of these passive investments is that you have your time to stack these, to continue to make money and passively invest in this real estate, because it's a passive option, yes, but it's also way better than investing in the stock market, in my opinion. You get the massive tax benefits on that. I've got videos on that too. But that depreciation you can use as a passive investor. So all that to say, you really just need to find out a way to passively invest in at least one deal a year. I just did a video about how doing one syndication a year can get you to $40,000 a year in passive cash flow in less than 5 years. It's the old adage of how things compound, and especially with investing, you really got to stack these, and those results are really going to start snowballing and getting you to a place where you can really start kicking back and going to the beach or whatever you want to do with your free time. But that's it. That's the end of the video. I really hope this has helped you become a better passive investor. If you have any questions, leave them down in the comments. We'll start a conversation there. If I can do anything to help you, please let me know. Otherwise, I hope you start looking at some investments and start getting some passive cash flow. Thank you, everyone. I hope you have a wonderful week. We'll see you next time.